Hey guys, Scott here. I've been asked a few questions lately about my Enphase price targets, and rather than just put out a spreadsheet with limited context, I figured I'd just make a quick video to kind of go over the spreadsheet, kind of detailing the structure and explain where exactly those numbers are coming from. If you're looking for the quick soundbite, the price targets that I have for the end of 2026 is 225 for the base case and 275 for the bull case, which I'm sure a lot of the bulls out there for Enphase are yelling into their computers saying it's not high enough. That's fine. I'd rather be um, too bearish and outperform than too bullish and fall short. So um, none of this is financial advice. Obviously, do your own research. Don't sue me, bro, kind of thing. Yeah, if you're looking to get into the weeds, let's get into the spreadsheet. As you can see already, this is broken up as you'd see a typical financial statement. Income statement, balance sheet, cash flow statement. That stuff feeds into like your expected ratios, like price to earnings, price to free cash flow, etc. And then below that we have like the capacity and production, for example. And that's kind of our way of getting a good idea of where Enphase is going to be in the near future. Then finally, the last section is like a key performance indicator slash calculator section. This is kind of where all the numbers from, well, all the historic values are fed into and then kind of extrapolated forward. It's kind of like the whole spreadsheet overall is just a big series of formulas that are all working together with other formulas. And that's where my numbers are generated from. That's why maybe it seems a little conservative in one spot, intentionally, as we'll see. So I think the easiest way to approach this is to, start at what we know for the next batch of data that we get, which is Q2. We know that that revenue range is going to be between 700 and 750 million dollars. So this, you can see, is actually being used as a formula that just so happens to be right in that middle range of guidance, which is essentially the number of IQs shipped, the number of IQ 7s shipped and their price, as well as the IQ 8s and their price, and as well the volume of batteries that are delivered and the revenue of the batteries. Important to note is that the price that we're using for the IQ 7s and the IQ 8s are the lowest tier that's available on their website. Again, model's very conservative intentionally. Similar thing with the batteries. The revenue per battery is a little hazy. So what I did is I took the number from February 2023's investor presentation, and I kind of extrapolated what the estimate or average that Enphase was putting out there to be $6,700 per battery. If you take all of this revenue and add it together, it fits very nicely with the guidance that we have. So all that is just to show that that is kind of the working formula that we use to dictate revenue. And the next set of numbers that we need, where's revenue going, which we can extrapolate from what is capacity, where's capacity going, and even more importantly, deliveries. I guess before we move on any further, it's important to note that this spreadsheet is very heavily microinverter dependent. It's not so much for the batteries, again, because it's just a little bit hazy for me. So you'll see that the volume of batteries doesn't grow too crazy between now and the end of 2026. These are just put in arbitrarily, so like the volume of the batteries. So safe to assume we can expect higher volume for deliveries, but aim for worst case, like I said earlier. The thing that we're going to mostly focus on is the microinverter capacity. So right now we are at 6 million capacity. That's including the new Romania factory. With that capacity, we know that the approximate number of microinverters that are shipped is 4.5 million. So like 75% of capacity is what's actually being delivered. And that's an important number to know. Where we're heading from 6 million current capacity is 10 million current capacity. Now these numbers right here, these are not actually in the spreadsheet, so don't worry too much about those. It's actually the USA total that we're worried about, and this one down here, the total shipped. The way that we're going to kind of extrapolate how long it's going to take Enphase to reach the 10 million per quarter mark is to kind of hang on a quote that Badri said, I think in Q1. Let's see if I can find it here. We estimate shipments to reach our US capacity of 4.5 million micro inverters per quarter by the end of 2024, assuming robust demand. The keyword here is shipments. This isn't capacity, this is shipments. Enphase themselves are estimating that, we'll call it starting 2025, we're going to hit that 4.5 million. For the sake of conservation, what I've done is I've actually taken that, pushed that back by a full year. Why I think that is actually over-conservative, let's go up to past guidance. You'll see that as far back as I've gone for Enphase's guidance, they've always got, they guide for revenue, gross margin, and total OPEX. For each of these here, if they fell within guidance, I just left it black. If they beat guidance, green, and if they fell short of guidance, we went with red. So as you can see, for those three categories, Enphase generally beats guidance. So to go back to that 2025 quote, I think it's safe to say that we are going to hit this, but let's be conservative and assume that it's going to take a full year delay because anything could happen. So you can see here that the 4.5 million microinverters per quarter for USA, 4.5 million is starting in Q1 of 2026, with the overall capacity, including like Romania and the other facilities, we're assuming that is actually going to take till 2027 to get them all at capacity. All of those numbers that are kind of feeding into each other dictates the share price. To arrive at a share price for the end of 2026, what I do is I use a series of 3 different formulas that all dictate the share price based upon different parameters. So one of these is based on the PEG ratio, so it's more tied to earnings. Another one of these is based on kind of the company overall, like operating cash flow, book value, net income, and sales. So it kind of takes like the overall growth of like the whole organism that is the company, and it dictates a share price based on that approximate growth rate. And then the last one is based on free cash flow for the price. So you can see that these numbers in the multiplier column are what we're assuming. So to think of this very like simplistically, we're assuming that Enphase is growing at 24% earnings, 18% overall growth, and then this final one is based on, we'll call it 22.5% free cash flow growth. Now those numbers are being fed from that calculator section below, which we'll explain here. So the revenue, for example, we'll start with revenue, and it trickles down the same for earnings and free cash flow, but you'll understand what I'm getting at here. You can see overall, using that trajectory of demand and capacity growing in tandem, you can see overall it's taking the average of the forward values that we have, and it is calculating those here. So if you were to take quarter by quarter, or sorry, this is year by year, sorry, year over year, the average growth rate is 25.56%. That's the average growth rate. Now, same thing for earnings. The earnings growth rate is just all of the forward values averaged out. And then same thing again for the free cash flow growth. That is how I've arrived at the 223.4 by the end of 2026, based upon kind of pushing the whole company back by basically 1.5, kind of 2 years, depending how you're looking at it. And again, that's why my price target seems so conservative, why I felt the need to make a video to kind of complement it, because going forward after this price target, this very conservative price target is met, we can assume that the continued growth rate going forward is are these values here. And when you compare that to the S&P 500 growing at 15% on average historically, you're going to, the way that I'm looking at it, I should say, You hold the company for 3 years till the end of 2026. Your shares are going to grow this number here, 28% we'll call it. This number might change because I'm doing this while the market's live, but 28% to hold for 3 years, that's not going to outperform the market. But if Enphase continues to grow at 25%, or whatever the average is here, we'll even call it 20%, you're still going to be outperforming the S&P 500 going forward. So you're paying for a bit of growth is really what I'm saying. That being said, I hopefully that was all clear, and we can kind of have a bit of fun with it now and show you the bull case. So the bull case, what we're going to change is this 18% assumption. These two numbers will also change based upon the growth rate of the demand, or the deliveries, excuse me. So don't worry about these right now, but we are going to manually change this one. And you'll see in a sec. So we're going to manually change that to 20. Then we're going to update this because the USA total will not grow at the same rate. It'll actually grow. I've done these numbers before, that's why these are here. So that's actually going to grow at 55.18%. And this will cap here. So we're going to drag this over. So that's that. We're capping out at starting 2025 at 4.5 for America. And down here, the total, obviously, it right now it's set up to start 2027 quarter one. We're at the 10 million unit run rate, but we're going to also change this 7.52, and then we also need to make a slight adjustment here to equal AI 96. Oh, it's editing that for me. One sec. Bring that over. So that should be set at 10 million. Okay, good. Now that those have been adjusted, we can revisit those price targets. Oh, and keep in mind, because we made those adjustments, the averages for the revenue, earnings, and free cash flow growth are going to change, as you can see up here now. So it's reflected to be like 28% growth for earnings, and about 25% for free cash flow, and 20% as we said before. So that's where I get the 275 bull case price target. And this looks a lot healthier too, like the 56%, 57% growth to hold for 3 years, and then 28 or 25% overall, something like that, and definitely into the future. That's a pretty nice hold. You're going to outperform the market, and I mean if Enphase grows even faster than that, then great. We're this number will be over 300 by 2026. The final thing that I kind of forgot to talk about earlier is the IRA incentive. This is a quote from Badri from the Q4 earnings. To paraphrase, is that Enphase basically gets $20 from every inverter that is made in America. So that's another thing that was calculated into the effective tax rate. Is that where are we? Yeah, this minus 22%. That's the tax rate that we're using overall for all the facilities, because I mean higher in some countries, not so high in other countries. But then for America, we know that every microinverter you can basically times by 20 for the IRA incentive, and then subtract that from the tax rate. You'll also be able to see that the difference that it's going to make for earnings. That's a pretty big jump between the two. It goes from what would be 1.75 without the IRA EPS for 2026 quarter 4 to 230. So it's meaningful. That is more or less where I get my price targets from. And we got earnings coming up fairly soon, and hopefully we get a bit more guidance, because there have been I want to know a little bit more about the ramp rates for the production for the new facilities. Another thing too is Flex was just announced to be operational, but there was also supposed to be another facility prior to that we haven't heard anything of. So I don't know if that means that they're in production just quietly, or if that there's some sort of delay. But it would be nice to get a little more guidance on that path to delivery, is really how long it'll take us to match capacity to shipments slash deliveries. So that, my friends, is my evaluation process for Enphase. I know it's not the most bullish out there, but I think it's probably one of the most rational or realistic. If you enjoyed the video, like, share, whatever I'm supposed to tell you as a video maker. And if you have any comments, suggestions, critiques, feel free to reach out. More input is better than less input. Aside from that, you guys have an awesome day, and I'll talk to you soon. Cheers.